Welcome to Impact Investing, brought to you by the Supporters Fund. From the city with the only castle in North America, Toronto, Canada, I'm your host, Jeffery J.P. Potvin. Let's please welcome from the city with over 800 languages spoken, New York City in the United States of America, Chris Wake from Atypical Ventures. Welcome, Chris. It's a real pleasure having you join us today.
It's a pleasure to be here. I now feel deficient on my languages. I got some work to do.
Yeah, 3, 4 languages, and you got to compete with 800. So it's pretty impressive. And the whole backbone behind that is English. So I guess in a way we can still say that we're contributing to a positive society because we can speak at least one language, which is good. Well, I'm really excited to have you here today, Chris, for many reasons, because we get to dive into a conversation, but the way you're investing is what really excites me because you guys are kind of pushing the limit and the line on how investing works and the direction and the types of companies that you look at. So I'm pretty excited to dive into that. But before we do, we want to learn a bit more about yourself. And the way we like to kick our show off is we want to learn more about you. So going back to your background, from your MBA days all the way through, if you could share a bit about yourself and then one thing about you that nobody would know.
Sure. So let's see. I'm a longtime operator, first-time fund manager. So only been on the fund side for about 4 years and change, going on 5 years. Prior to that was building and scaling companies. So had a couple of startups of my own. Tried a couple things, learned pretty quickly I didn't like being kind of a solo founder or like the head of something so much as I liked kind of working on crazy ambitious things. Lo and behold, found myself as first employee and then head of operations at a company building and launching small satellites. So literally shoebox sized satellites. At the time, it was 3 founders in a garage, literally, working on satellites and talking about launching things into space. So joined on board there, spent about 3.5 years. We went from 0 to space in 12 months with our first 3 satellites. The first one was literally built on a desk that the CEO and I found on the sidewalk in San Francisco, brought back to the office, and jerry rigged a kind of clean box on top of it in order to build the satellite. We launched about 65 satellites in 3.5 years, raised a bunch of money. Company's since gone public. I got to do a lot of cool things like booking out rockets with Elon and NASA and Roscosmos and JAXA and everybody else, to traveling the world with a radio frequency test kit to figure out where to drop antennas to talk to space. Got some cool stories about airport security and rooftops in various countries and so forth. And then once I left that, I kind of bounced around to a number of other mostly frontier companies, still a little bit with small satellite launch vehicles, some autonomous vehicles, a little bit in like computer vision for geospatial data, internet infrastructure, buzzword. Ended up at a venture firm in the Bay Area as an entrepreneur in residence, which got to think big thoughts for a year and spend time with a great group of people thinking about starting a company. Thought I was going to start a cybersecurity company. Lo and behold, my wife and I, near the end of that time, decided that we wanted to move from the Bay to New York. When I got out here, it took about 6 months of meeting people and continuing to test out ideas to find that I was more passionate picking up the phone every time some random early technical founder was calling looking for advice and money than I was digging into my own cybersecurity ideas. And so realized there was a ripe opportunity for someone with operating experience and some capital on the East Coast to focus on real frontier tech. And I had a passion to do it. So if I could be an advisor full time, I would have done that. Lo and behold, didn't have any capital at the time, so decided to start Atypical, raise some capital, and try to back literal and figurative moonshots. That takes us pretty much to today.
I love it. And one thing about you that nobody would know.
Yeah, one thing. So back in the day, one of my early ventures, I always knew I wanted to be an entrepreneur, or kind of I was entrepreneurial from the start. I manufactured and imported jump to conclusions doormats. So if you've ever seen the movie Office Space, There's this jump to conclusions, Matt. It's the worst idea ever. A buddy and I decided that we would manufacture these doormats as a novelty item. Lo and behold, I was telling someone about this recently, and I think they now have a market because the people who really liked Office Space are now of the age that they would actually buy doormats. But at the time, it was a struggle just to sell the things.
That's awesome. It's a good story. But what I like about the story isn't that you were trying something that didn't work. That's common. Is that you were finding gaps, which were the novelty item of something that was interesting enough that you thought, hey, I could turn this into a business. That's really what entrepreneurship is all about.
Yeah.
That's pretty cool.
And you kind of serve yourself. You want the thing, make the thing.
Yep, exactly. Well, to kind of peel back on your story and go back a little bit to your operational side, when you were starting and working inside of these companies, and not every day that you get a lot of operational people that tend to go into the venture side or become, I guess, advisors, coaches, and all the great things that support. Can you share a little bit about what that experience was like? You were talking about building satellites and moving that pretty fast. So you jumped into kind of a, I would say, maybe a smaller subset of what startups do. I know in Israel there's a massive space push. They do a lot of stuff in that space, but it's also kind of built around armies. So it's not as typical, I guess, across North America or Europe. So when you were diving into this space from an operational standpoint, are there a few things that you learned as an operator that you find that maybe is lacking or could be more pushed with companies today?
Sorry, can you repeat the question? It had a slight gap there.
For sure. So when you were working as an operational in operations over the last 15, 20 years, and you're working in the startup space, did you find and have you found that today in working with founders that there is a gap between how operations are looked at, viewed, and can you take some of those learnings and share what those are? Like, what are you finding is the big miss today with founders in the operational side? Are they operational? Are they more, I'm just a founder, I don't have time for this, and try to, sparse it out? Like, where are you seeing the gaps?
So it's an interesting question. I think that you continue to have deep operators go into starting companies, which is great. The gaps that I see, one, I think there's the reality of entrepreneurship, which is that it's hard. And, the reality of it is most things will fail. Now, we could get into kind of the semantics of failure, and failure to some extent is your willingness to give up as opposed to persist. But some things ultimately won't find kind of product market fit. And so I think, there's the gap around execution that, entrepreneurs really need to kind of figure out how to execute and find the one thing that will move the business forward, and almost kind of wake up every single day with that mentality in mind. What is the single most important thing that I could do to move this forward, or to, invalidate my assumption as quickly as possible so that I can kill this idea and get on to the next one, if that's the case. There's the flip side of it too, which I think is good and bad, insofar as I've heard at least that we're in kind of a lull for overall entrepreneurship. You wouldn't know it to kind of sit in the startup ecosystem and kind of see ventures kind of popping up here, there, and everywhere. I think we're seeing a bit of a renaissance where people are kind of launching brand new companies. But within that context, there's been, the story of the lone genius creating a great company and then selling it for massive dollars. And that's driven a lot of people kind of into the appeal of entrepreneurship, but they may not have kind of the grit or determination to put behind it. They kind of see it as a test. So maybe I can do this thing and maybe I can have a quick exit. You're not really going to succeed if you come in with that mentality of just trying to go after a short-term or transient goal like an exit. You really have to have belief and grit and determination behind what it is you're doing, and understand that it's hard, and it's going to take some iterations, and what you think may be the thing today may not be the thing in a week, or may not be the same thing in even 6 months. So at least for us, Atypical, a lot of what we end up focusing on in evaluating founders is really not what they think, because that will change 5 times to Sunday, but it's how they think and how they apply different mental models to what it is they're doing. And that gives us a greater understanding or belief that, what is true today may be true in 5 years, that kind of how you think, as opposed to what it is you know to be true, quote unquote, today. Does that make sense?
It does. And there's lots of things there that we can unpack, which is, I think it's fascinating that when you look at the way media has mediatized entrepreneurship over the last, say, 5 to 10 years, it became almost media was pushing people to become entrepreneurs and to go into this space. And almost everybody had the profile that said, entrepreneur. And I think people realized, to your point, it was a very difficult spot to be in, that now I'm a lone shark and I'm trying to build this company. I don't understand what I'm doing, which then kind of fostered out accelerators, incubators, and they started to build up a lot bigger in the space as well, because everybody realized that all of these founders need some sort of help, and how do we help them? So going back to your days when you were starting and working on this with 3 founders, did you find that having 3 founders in a business actually made it easier because you could bounce ideas off? You're all in the same garage, you were working together, that this was more conducive to the environment of creating a company than it is today, where you were talking about, I had to move from being a solo founder because, your mind goes, you want people to be around or you want to interact, and it's not there. Are you finding that that's kind of where the world is sitting, is that we've created this isolation and we've told everybody they got to go here, and now when they're there, they're kind of, wow, wait a sec, I don't know if I can handle this, I don't know if I should be here? And then you reflect back when you were working as teams, do you find that you kind of push your way into that with founders as well? Look for co-founders, look for businesses that fit that thesis because you had a better experience? Or do you focus just on great companies and great people?
So we tend to focus on great companies and great people. There's a lot to unpack, like you said. There's no singular way to success, and you really have to be specific to the type of venture that you're going after, and also every individual is unique. Some people can really handle the what I would classify as loneliness of being a solo founder, and the uncertainty that goes along with that. So you'll go through peaks and valleys of elation one day and then complete sorrow the next day, and it's tough. That's hard being a solo founder. If you have co-founders, it's a little bit easier to balance out emotions, because oftentimes when one person's high, the other person may be low, and so it kind of balances out over time. With the satellite company too, it was really expertise. So in that case, we had mechanical engineering, electrical engineering, basic physics, and also business understanding. And so it was kind of this amalgamation of expertise that really came together around something that required all of those. So I think depending on the venture, you really want to have the right kind of skill gaps filled. And again, this kind of goes back to, with Atypical, when we look at kind of founders, we have this archetype where we only invest in kind of a singular archetype of individual, what we classify as an engineer with empathy. So really what that means to us is we're looking for the raw IQ to build the impossible thing, combined with the intellectual humility to recognize that they don't know all of the answers, nor should they. And they're a bit more of like a learning machine, where they're always trying to kind of learn from others and pull in the best of the best kind of solutions to apply to the problem at hand. And oftentimes that means that they're pulling together other superpowers from individuals and inspiring a team of people around them, as opposed to kind of this idea of the solo technical genius that creates a massive company. That doesn't really exist. We think it does, and it's easy to kind of point to the one person, but ultimately it always comes down to a team effort.
I like that, and I like the part that you meant by you shared on the inspiring side. So I'll take that in a second. But when you're looking for engineers with empathy, it's fascinating because over time I've myself and other investors, of course, come across a lot of founders that build in the hardware or software space on the engineer side, and they tend to be maybe disconnected from the team or the environment that they're in. And I think that sometimes is off-putting to investors because they're looking for, it seems like, oh, I need friends, I need to invest in people that are like me, or whatever that might look like. So it tends to kind of um, put them into a different path, and maybe it makes it a bit more difficult for them to hire, to raise funds, all of those things. When you take where you're sitting right now and how you're doing this, it sounds like you're also looking for that inspiration that these founders carry something, which is the empathy side, but they're able to inspire people through their learning. So it sounds like kind of like this mature founder that's being able to do a lot with a little and kind of build from there. And is that a fair statement? And are you finding that, again, this person that carries this inspiring notion, that they're doing this in a larger team, like they've already come in with co-founders, or do you see this in solo founders?
You could see it in solo founders. So, when we talk about founders in a company, really what we're talking about is kind of the risk reward. So the equity benefit that you get alongside how much risk you're willing to take. That doesn't always work out for some people. And so sometimes you do have a solo founder that has to kind of take the reins and be that individual lead to take something to a certain point. And then they're able to bring in people alongside them who take meaningful stakes in the company. But it may not be, the 50-50 split or the 60-40 split or whatever it is that we kind of commonly think about as like co-founders. So you could have that. I think the uniqueness really does come down to this ability to inspire and pull people in. And it's kind of funny because our job becomes that much more easy in a way. Because as you called out, rightly so, there are a lot of technical geniuses who you talk to them and you're in awe of kind of their technical brilliance, but their ability to kind of pull you in to that story, or to kind of bring you into it in some way, shape, or form, or to see that you have some value to bring isn't always there. So going back to my satellite days on the operating side, I mean, I literally interviewed thousands of engineers across the country at some of the U.S. best engineering schools, looking to build out a talent engine for our satellite company. Ultimately, we hired less than 1% of applicants that came through the door that we identified. And part of it came down to this similar rubric of IQ, EQ, and passion. And so, I've spoken to my fair share of PhDs who need to be locked in a closet in order to produce good work. That's not an individual that we can really back. And in part, it also goes back to this, the thesis for our investment, which comes down to, we don't want to just make bets. We ultimately will only invest where we believe that we can impact the outcome through more than just money. And so that requires a bit of that, back and forth partnership with our founders in the same way that they may have with a co-founder or they may not have, but they need to kind of have it with us such that they recognize that there's something that we can and want to bring to the table beyond just giving them a check and saying, bye-bye, see you later, let me know when you have a big exit.
No, and that's fair to say. And it's interesting that you're kind of seeing where their shortcomings are, and you're ensuring that throughout all that time from when you were hiring and going through that process, you saw where maybe you did take a leap of faith and saw it didn't work. So you start to build your own matrix on what works, what doesn't work, based off of the people that you're associating with. So in this case, you're going to be investing in them now, whereas before you may have been hiring. So now that you're investing, you're looking for that same dynamic because you saw the troubles you had early on, and you want to avoid those pit stops. But to your point, you also can still, the teams can still hire those people because they can still do great work. But you have to look for somebody that is more dynamic, that has more of that sales front, that can be just as smart and inspiring, but also has to have a background in communications per se, and being able to get everybody around them moving and building the same business and getting behind that same thesis.
Yeah. I think the most concise way that I've kind of heard it put, and this is a slightly different element versus how we think about empathy, but ultimately these are learning machines. They're individuals who don't think about it as I have all the knowledge, but they're growth minded and they believe like I can find it. And they're desirous to actually go out and find that knowledge. And that kind of comes out and not just kind of the things that they consume and read and try to learn, but also the people that they try to surround themselves with, because they do believe that they can actually pull something meaningful from those individuals that they pull into their close cohort.
Yeah, that's a very valid point that, when you're building and growing your business and inspiring the team around you, as a founder, you still also have to be invigorated and driven. And those people will bring a lot of value and you'll learn from them. But there's also another side, which is where is the founder gaining their creativity, their knowledge? Who are they surrounding themselves with? Is it just investors, or are they going out and being part of different groups? And how are those groups generating value for them? So it's very valid. You don't always think of that. What is the founder doing to obviously drive themselves and become better? And you mentioned you're interviewing, flying all over the world, so you're meeting different people, you're part of different networks. So what is the network that that person's part of? And I think that does become valuable. And maybe founders need to share, hey, I'm part of a wine club, or I'm part of this. And maybe those types of things will also help investors like yourself be able to explore that they have a different side to them, not just business, not just these little buckets.
Yeah, you bring up. It's funny you bring up wine club. I mean, we have a big focus internally at Atypical on the idea of type 2 fun. So there's a thing called the fun scale. Type 1 fun is things that are sitting out with a bunch of friends on a patio, having a drink and just kind of conversating. That's just fun, objectively. Type 2 fun is the type of thing that is gruesome or arduous in the moment, but afterwards you feel very rewarded for having done it. So running a marathon, climbing a mountain, etc. And type 3 fun is just the thing that's never fun to begin with, and you would never want to do it. And so for us, internally, myself and Lily, who I work with, is we're both type 2 fun addicts. I randomly decided to run 4 marathons in 2 years. She climbs mountains, and we're always kind of going after the next thing. And it's funny to kind of draw the correlation with talking to our founders and seeing that they are the same type of crazy that we are. And there is something to this notion of the way you do one thing is the way you do all things. And so starting a company is literally type 2 fun. Starting a deep tech company is the epitome of type 2 fun, because, oh, wow, are you going after all of the complexity? And so we found that there's a lot of similarity in the folks. In fact, we're running the Brooklyn Half Marathon next month with a couple of our founders and a couple of folks that are within our network, as one way that we like pull people together and have a whole thing around atypical athletes and pulling people into our wild and crazy different explorations of kite surfing or mountain climbing or running or whatever the case may be.
No, that's brilliant. And in one of the other podcasts that I was doing, they mentioned that a lot of the founders tend to have this structure where individually they're doing outside crazy things. So maybe a marathon is crazy, but climbing mountains and doing things that have this extra level of solo, because they spend the rest of their time being programmatic. So that's kind of how I understand it, is that you look at everything like, I have to be here every day, I have to do this. So I need to take myself out of that element, and to be able to challenge myself individually, I have to go do something that's more extreme. So kite surfing or jumping out of base diving, whatever it might be. It sounds like you have to take yourself out of that environment in order to really drive yourself even more in the space that you're currently in. So you're invigorated every day, but in order for myself to have that focus, I go do something that's more extreme. It re-energizes me, and I come back and I'm even better than I was when I left. I'm guessing that's kind of a similar aspect to what you're sharing on this fund 1, 2, and 3 side.
Yeah, there's definitely a bit to that. I think the structured versus unstructured and kind of the reliance on the self is certainly a piece of it. I think that delayed gratification and working towards a goal that is worth the risk and worth the work is another piece of it too. So being able to kind of overcome something that is far enough out that you actually have to work and continue to just persist. Is very similar to the same thing you see in kind of startup culture and launching your company. Um, so yeah, there's definitely a number of kind of corollaries there between like the individual structure and this piece around kind of the persistence.
And one of the other things that you talked about on that persistence side is you went into execution. And I think from an operator standpoint, their whole end goal is to make sure that they're flawless on execution, or they're not going to be very good operators. I would make the assumption. So on that execution side, the business and what we find is when you're investing, the whole thing for me is execution is primary. It's if you can be a great executor as a business, then that creates that repeat motion. People want something that's executed and flawless. How are you finding that today with the amount of micro companies that are out there and trying to grow and jump on funding, is one of them lacking execution or abilities or understanding of smooth operations? Or are you finding that everybody's really good at operations, they're just not great at building the business, which is generating the revenue for the problem they're solving? Like, is there a disconnect between one versus the other?
Uh, so you're not explicitly asking the question, but I would say that the disconnect I see perhaps around kind of that execution piece is it relates to the goal. So what is the goal that you are pursuing? And I think there's too much focus, or there has been too much focus within the startup venture ecosystem on transient goals, specifically fundraising as a next goal. I mean, the very fact that we celebrate fundraising as a thing just doesn't make sense. It's congratulations, you took on more money and gave away more of your company, and now you need to do the work. The work is the thing. The work is the win. And yet we celebrate the fundraising as kind of the milestone. And I think specifically from my standpoint, a lot of what we focus on with our founders is trying to not go after the transient goals. I don't really care if you raise more money. In fact, I love free money. I don't think we get enough focus on non-dilutive capital or on tax credits or on actually getting revenue from customers. Those things are fantastic. You turn my $1 invested into 3 or 4 net effective. Amazing. I love it. Let's do more of that. But instead we have this kind of roller coaster focus on what is that next round and how do we prepare you to raise an up round such that we can put a mark on our books and suddenly you have more capital to do more things. But are you doing the right things, or are you just going to the next subsequent round? And so I think when we think about operating and really execution, it comes down to this idea of picking the right goal and trying to strengthen the business and find ways to kind of execute on things that will ultimately have reciprocal value back to the business to make that something that persists, not just through subsequent rounds of financing if you need to raise more financing, but ultimately becomes a long-term sustainable business that actually creates net new value. That's another thing that I think is maybe slightly unique around our focus, is that we like things that create net new value as opposed to going into an existing market and just trying to figure out how you can extract more than the next guy.
I like that you're taking the execution and you're kind of converting it to metrics, or a more of a metric based system, and saying that your goals have to align with the business outcomes and the value that you need to create in order to grow. And that raising funds becomes, or the number of people on your team. I'm 1,000 people on my team. That is also like, those two things seem to be the benchmark of how successful a company is. And when you look at it, and the numbers I'll have to validate, but I think it's something like, of the Fortune 500 companies, only 20% of them are actually profitable. So the metrics don't exactly align to what you're told and how you're taught how to build a company. But if you take how you've just shared this, that if you can align your business with the right goals to the outcome that your business requires in order to grow, then maybe that would change, that you don't need to say we raise this much money. and use that as your goal, and that everybody gets excited about, you can start to shift it and say, our company in the last 12 months hit our goal revenue targets of X, our growth targets of Y, our sustainability target of T, whatever those are. But those metrics would then be more aligned to what people want to see in a company and be able to gravitate more to that, which would then increase the value of the operational side of it because they're aligning to the initial actual initiatives of the business versus, as you said, hey, we took on more debt, everybody, let's have a party, or hey, we
Yeah.
reduced our company ownership by 60%, so now let's celebrate. So it kind of does make sense.
Yeah. I mean, it also, if you think about it, we're investing at the earliest stages in these companies. At least, Atypical, we invest, pre-seed, seed, whatever that is now, at the earliest stages. The timeline to see something from these companies is, 5, 8, 10 years, within kind of the fund life cycle. So those kind of interim steps on valuation, they don't make a difference. Like, we're going for the ultimate outcome. Like, that's what we want. So we want a really strong business that can produce a meaningful outcome at the end of the day. If they raise more money in the interim, it just means our stake is lower and the outcome has to be larger. Well, that's problematic. So let's figure out the right goals to pursue, and everybody wins.
I love that. And you're right. You're like, we're diluting ourselves every time you go out and raise funds and celebrate this. So how do we kind of align all of our goals, which is let's build a sustainable company that's based off different principles? And I guess that goes back to the type of founder that you're looking for at the same time is what are their goals, and are they regulating these goals throughout time? Are they trying to get the team aligned every year? Are they creating the right strategies and the right way to build that efficiency, that operational efficiency, that execution? Are they building those things in, and are they doing it on a regular basis?
Yeah. Part of it goes to this idea of, are they in this for the mission, or are they in this to be an entrepreneur? Because to some extent, being an entrepreneur, quote unquote, has kind of taken on this notion that you continually raise capital. But I'm really looking for someone who's in this for the mission and trying to build the thing. And oftentimes, particularly in capital intensive industries or areas, those founders, and that's specifically the ones we look for, have an almost supernatural understanding of the downstream funding risks and also the opportunities. They understand how much capital needs to go into the business. They understand where they need to go to get that capital and who the potential next set of investors would be, and how they will have to kind of execute in order to maybe unlock that capital. But then on the flip side, with the opportunities, they also understand there's a lot of places to get non-dilutive funding. You can get grants, you can get government program funding, you can get tax incentives. R&D tax credits are amazing. I don't know why more people don't talk about R&D tax credits or about qualified small business stock. This is free money, people. It's just it's an interesting space, and again, the founders that we look for tend to have an understanding of kind of the total cost of what it will take to get to scale, and how they can potentially think through ways to also maintain their own ownership stake in that business and to really build something meaningful.
I like that. And you mentioned earlier on just about the risk factor and the types of risks that they're getting in. And now what you're sharing is that these founders are looking at all different means of raising funds, from non-dilutive to obviously the investor side. I'm sure there's debts, there's all these things that they would be looking at. You coming from a high risk building satellites, it's not exactly no risk in that standpoint of what you're doing. So you're kind of extremely looking at a business model. So today, the way your fund operates, are you looking for that same structure where people are really high risk, doing everything they can to push the envelope? Or is it more processed where you can kind of align to what they're doing and understand where they're going because it's written down, it's in a chart, it's in a graph? Or is it, no, it's high in the sky, man, just go after it, break down every barrier, do what you have to do because we want that extreme risk, high risk side, because that's how we invest?
Good question. It's a hard one to answer. And I say it's hard to answer because there's a misconception that when you do frontier or deep tech, it's just inherently expensive. And I think that that isn't always the case, particularly when you do have founders or that are focused on kind of what that total cost will be and how they can unlock funding. I think it also comes down to the problem that you're solving. So, our overarching thesis for the fund is plausible science fiction. Plausible science fiction. We don't just pursue kind of novelty for novelty's sake. We're really going after things that kind of push the boundaries of what is possible. And oftentimes that means we're trying to solve foundational problems. And the other net benefit of foundational problems is that they're persistent across multiple industries. So that gives you some optionality and kind of your go to market and where you can potentially sell the thing based on how burning that need is in one market versus another. It also means that oftentimes these things end up looking like critical infrastructure or like opportunities where the government is desirous to actually fund some portion of that development, or industry is desirous to fund some portion of that development through actually being an early customer because the thing just solves a problem they never thought could be solved. And so I think for us, it's we take we take some crazy risks. I mean, a month ago, one of our companies put the world's first data center on the moon. So we invested in people who thought that they would just launch something to the moon. Well, lo and behold, they did it. And so we now have a data center on the moon. But within that, I mean, we took a big risk. It's a expensive proposition, a long time horizon. Your customers are really ultimately governments and large institutions, which don't have short sales cycles. But the interesting thing on that one is that once you get going with relatively low amounts of equity capital or financing from kind of venture, you can finance a lot of that through debt. And so your cost of capital actually goes to the floor, essentially, because if your customers are literal governments, there's almost no better kind of credit risk for a debt financer to step up and start to provide some sort of debt financing against that before you ever even leave the pad. So before you ever launch something into space, ultimately you can start to pre-sell every single one of those missions. And that becomes quite interesting.
Yeah, I guess in a way, as you start to make that risky choice of investment, you're also mitigating the risk later on because you can start to envision where this is more applicable and who would eat the risk because you're solving such a large anomaly that you didn't think was possible.
Yeah. I mean, risk has been around for eons, and if you can identify the risk and you can quantify some level of risk, there's someone willing to underwrite it. Full stop.
Fair. So now my last question before we dive into the 60-second rant, how do you mitigate the fraud that comes with these high risk ideas? How do you determine that when they're coming to you, and take Theranos as an example only because it's top of mind, is that the idea was sound, logical, but because everybody would want to do something like this. Well, I think taking a small amount of blood and to be able to provide a lot of data from that, I think everybody would love to see that happen. But being able to do it, I think, is a totally different ballgame. How would you do this? Could you do this? And you're going after people to invest in you that believed in the hype of the fact that getting a lot of data out of something really tiny makes sense, because everybody that was investing was saying, yeah, you know what, this is something that's needed. How do we do this? How do we reduce the amount of volume that if we could solve this, my God, we would be able to do these things in seconds, and that would open up other industries. So I think the mind started to go and trace that. So that's why it became this doable concept and the risk. But on the other end, it was also the people that were really into this space. They were like, nah, this is impossible, can't be done. But everybody else wasn't feeling it that way. They were like, this is incredible. Yes, we need this. So how do you, and these are the ones where usually people that invest are the ones that don't have the knowledge because they're not in the system and they're not part of that. And they weren't pulling those people in. They weren't getting obviously the person that was running blood every day and getting them on a foghorn and saying, hey, this doesn't work. So they were avoiding those people from an investor standpoint. So how do you guys look at this and say, hey, what they're saying is it's doable or it's not doable, but you're also foreseeing 10 years from now. So maybe this company came to you 3 years ago and Elon hadn't actually been to the moon yet. So you have to project, could we actually get a data center on the moon that they would let us sit there? And would this be able to go up and say one of Elon's ships that aren't really going anywhere right now? So you're kind of projecting, is this even feasible? And do you want to invest today to see what the outcome is in 5 years? Because it could be nothing because we're not at the frontier in 5 years. So that might be 10 or 20 from now. So there's a heavy hitting question, but how do you avoid the fraud, which is you're building on the hype versus on the reality that this could be something solved?
So there are a couple rules of thumb that I'll throw out, and I can give you a more kind of in-depth answer. So one, we invest in quietly awesome people. And I say that because there's oftentimes an imbalance between work and talk, and those who can talk a really good game. Not always, but oftentimes you'll find something deficient in the work, and those who put in a lot of work and find value in the work itself aren't always the best at talking about it. And so this kind of goes back to the archetype of founder that we look for. And engineers are inherently rational beings. They focus on oftentimes building a rational argument for why this thing should exist, and they walk you through the logic of it. That's very different than how investors tend to look at things, and just people in general. I mean, human beings inherently feel before they think, and so rational arguments don't always land. So we find ourselves oftentimes looking at decks and materials and almost acting as forensic scientists to pick apart what actually is special and what's going on behind the scenes. And we spend an awful lot of time talking to the founders and going into deep technical detail to really understand the nuances of what's happening inside the black box, as opposed to kind of taking it at face value that this thing can exist. So there's a Dan Golden from NASA has a great kind of meme around, I'm waiting here for the physics. So show me the physics and actually walk me through how this works. That's a bit how we approach things. So we really want to understand, is this scientifically possible? And yes, you may be pushing the boundaries of what's possible today, but we want to understand, is this something that can happen within a 1-2 year time frame, or is this something that we're talking about in 10 to 15 years? Or like the oft quoted thing of fully autonomous vehicles will be 5 years out. It's 5 years. It's 5 years, and we said that for 15 years. It was just nobody really had a good idea around when it would actually happen. So we dive into the technology. We try to look for those places where we're not investing into hype, and we understand that when there's a really good kind of pitch or story, that we really probably need to dig a little bit deeper. That's one rule of thumb. And similarly, kind of to the Theranos comment, we don't invest in things that are, I just said it, we don't invest in hype. So if somebody comes to us with a lot of kind of big name investors, that's actually a knock against them in a way, where we want to dig in deeper and understand what's actually going on, because I don't trust other investors. I trust myself. So I trust myself, and I trust the people that are within our network that we call in to help us with technical diligence at times. And I want to know, is this thing real? And is it plausible? Or is it just novelty for novelty's sake, or something that we hope could happen, but we still have no idea how it'll actually come to be?
In a way, it sounds like, outside of projecting and being able to visualize where this possibilities are, is that at the same time, a lot of these types of innovations, you might be investing in to create the innovation. That it is, I always say there's two ways to sell a business. You sell the dream or you sell the data. And a lot of the time you're investing in the dream. The dream hasn't fulfilled its purpose of data yet because it's too early on. And like you said, on deep tech, it can take a long time before you've produced something. but the vision is there, and you keep writing IP and you keep doing things to get yourself to that execution point. But there are companies that have generated and raised hundreds of millions of dollars that haven't even made it to market yet, because it's back end code or it's back end functionality, and it hasn't got to that stage. And take Elon Musk on their side. It's not like they built a rocket in 5 days and put it on the moon and we're like, yeah, we're good. This is rocking. It took a long time, right? So there was a vision, and you had to buy into the founder that had the vision. The risk was there at the beginning when he first came up with the concept. Now, being different, he's been a founder many times, but if it was his first time doing that, would the risk have been there for you to say, this guy's the perfect fit? That's all the things he says. He's been executing, and he's going to be on the moon. So those are, who knows? I guess at the time we could never say that, I guess, with him. But there's other ones that you would see where you are betting on the jockey, and you're saying, what, I think this is possible. And is the time in the world ready to accept that person to do this in the next 5 or 10 years?
It's funny. Elon often comes up in the context of plausible science fiction, understandably so. The question I usually get is, would you have backed Elon in the early days? And it's funny because logistically it just wasn't possible. He self-funded the thing, and so you didn't have the opportunities to invest in him, and he wasn't seeking money. But then you take a step back and you look at kind of our thesis and the idea of engineers with empathy. People always kind of hone in on that. They're like, well, what about Elon? And they try to say that he doesn't have empathy. And I think the difference is actually just the scale. And this kind of comes down to, we don't have all the answers about how to identify empathy within individuals, but it's a question that we find fascinating and worth pursuing. And we continue to iterate on how we think about it. But Elon has empathy around the human race and moving the human race forward, and believes that the scale of that is important enough that the risks need to be taken and the execution day to day needs to happen. And one individual person's kind of feelings around one particular role don't matter in the grand scheme of kind of moving humanity forward. And so it's interesting just because most people are like, well, he doesn't have empathy, so like, well, you wouldn't invest in Elon? It's like, no, well, let me tell you, like, logistically it couldn't happen, and then secondarily, like, it becomes this nuanced conversation of like, is that the type of person that you can work with, and is there a relationship that you can have, back and forth, where again we can provide value beyond just the dollars, or are we literally just a bank or an ATM? If we're an ATM, like, go somewhere else. It's just not what we want to do.
Agreed. I think also he's a marketing machine, so I think he learned his environment, and he learned to be the outspoken, which is kind of against your thesis. You're not looking for someone that's just all hype and talk and then not doing anything. And he's had lots of companies that were hyped and never did anything. So I think there's a middle ground for sure for everything. But he also learned that if I want to bring value and I want to have these things, I need to hype the hell out of it. And he's obviously became the best at it, right? Like when his company was doing poorly, he came out with a flamethrower. So, like diversion tactics. Hey, don't look at how bad Tesla's doing. Look how great this flamethrower is. I call it the Elon Musk effect. And it's just, it was a way to divert you from what the truth was, because, hey, we're still building here, and don't beat me up for what we're building. You're cutting our timelines too short, and we need to get X done. So I think there's a lot of smarts to how he did everything. And maybe people overlook that because they look at him as being crazy. I look at it as it's methodical. He literally was looking at, we're going to have a downside. I've got these other products. Let's throw it out there. And you're seeing other people starting to do that now. Take Trump as an example. I'm going through a tough battle with all of these things. And look, I'm selling, what was he selling? Bibles. So he came out with Bibles. And it's a diversion tactic from everything else that's going on. But it also is empathetic to the people that are saying, hey, wait a second, I need a Bible. This is a good idea. So then it diverts and diffuses the situation. So I think that's actually just a smart marketing tactic of somebody that has a goal of where they're going, and these are just elements to get you there.
Yeah, you hone your craft over time for sure.
And he's been doing it a long time. Both of them have, obviously. So it's pretty fascinating to watch and read up on. And if you start to see those nuances, I think founders could pick up on these and start to realize that there's a lot more out there on how they can improve their engagement, not only with their teams, but obviously outside their networks. And those guys seem to be honing on that skill. So, but all right, we're going to switch into our rapid fire drive here. So the way it works is it's a rant. Oh, sorry, before the rapid fire, there's a rant, 60-second rant. So how this works is that you're going to rant about anything and anything that's on top of mind. You've got 60 seconds, no pressure. No one's ever hit 60 seconds. So it's over to you. I will flash 5 seconds, but I'll let you finish the thought, and then I'll jump in with a quick rebuttal. So when you're ready, you're on.
Oh man, pulling a rant out of nowhere is tough. But so I'd say my rant actually comes down to a good and a bad, but mostly the bad around how we've thrown this veneer of deep tech or frontier tech onto so many things, and you have a lot of investment dollars and interest kind of going into frontier and deep tech, in part because of all sorts of market dynamics, but a lot of it is focused on just this notion of, is it not even is it possible, but it's novelty for novelty's sake, and going after things that have no place or purpose necessarily, but we're projecting out what we think the future should look like, and we should have the Jetsons tomorrow, and so we should go about building the Jetsons, when in reality there's so many kind of real problems that we could be solving. A lot of what we end up focusing on at Atypical is really around this idea of like where technology is caught up to solve these foundational problems, and it's like the balance of the two, as opposed to like sitting in our ivory tower somewhere pontificating about what the future should look like, and then trying to throw dollars at things that may or may not actually have any possibility of fruition around creating that future. End rant. Soapbox over.
No, I love that. So my counter to that is that's this whole movement of altruistic value, and how altruistics want to think and drive and build something for the future and plan for the future, and get everybody tied into it. But I think to what you're driving at is that I think there's just a lack of understanding what deep tech is, what frontier tech is, what it actually means. Is it machine code learning? Is it the 10 steps of decoding? Like there is a step process that can tell you if this is deep tech. So is it one of these facets that actually make it deep tech? But at the end of the day, some of these businesses have gone 5-10 years without generating any revenue, have taken over $500 million in money that's gone into the company. The company's worth $2 billion. It's a securities company, and it's never even generated revenue, because it's this altruistic view that this company is going to change the way we do something, and we really need this, and let's just keep dumping money on it, which Jen kind of seems like it's a Ponzi scheme. So I don't know if just layering up on how you make your money. So is it really that we are overusing the word, or is it that we just don't understand what deep tech and frontier tech investing really is?
Oh, we're totally overusing the word. I tried to get schooled by some kid who was in his first job outside of school, investing in deep tech, on how to think about satellite constellations. I lived to breathe the thing for 3.5 years, but this person was in deep tech, and that's great. That's fantastic. Like, invest in deep tech, but come to it with some expertise or experience to actually evaluate the thing, so you don't have kind of Ponzi schemes like you mentioned with Theranos or otherwise. Like, you have to be able to evaluate the technology and understand what's going on behind the scenes in order to invest in it. And at the same point, you don't sit there and try to project out, what the future could be. Like, none of us are really good at forecasting what the future is going to be. Let's focus on actually solving real problems today using really hard technology and pushing science forward in some way, shape, or form, and go after things that are worth the risk. Like, focus there, put more dollars there.
I love it and agree with you. All right, we're going to switch over to the rapid fire business questions. If you're ready, pick one or the other as an investor. Ready to go?
Sorry, pick one or the other, investor or operator?
Yeah, so you choose from your end, because you're the investor, which one fits best for you. Who would you rather invest in? You a founder or co-founder?
A founder or co-founder?
One person or
founder.
2 people? Okay.
Co-founder. 2 people.
Okay. Unicorn or 4-year 10 exit?
Literal and figurative moonshots. I'll go for the unicorn.
Okay. Tech or CPG?
Oh, tech.
NFTs?
1,000 times over, tech.
NFTs or Web 3.0?
NFTs.
AI or blockchain?
AI.
First time founder or second, third time founder?
First time.
First money in or Series A?
First money.
Angel or VC?
Ooh, that's a tough one. Angel.
Board seat or observer?
Observer.
Safe or convertible note?
Ooh. Convertible.
Lead or follow?
Lead.
Favorite part of investing?
Working with really badass people doing cool shit.
Well said. Number of companies invested per year?
4.
Perfect. Verticals of focus?
Hard problems.
2 qualities for a startup to stand out to you?
Technical moat and foundational problem.
Okay. What is a piece of advice you give founders 9 out of 10 times?
Human beings inherently feel before they think.
Okay. What tech will define the world in the next 5 years?
Ooh. Synthetic biology.
Like it. Who is your hero, mentor, and why?
Ooh. I don't know. I haven't answered that one. My pithy response would be Batman. Because he made his technical reality.
That's actually part of the personal question, so I love that. That's good. All right. Before we jump into that one, I will ask one that's because it's focused on what your background is and what you're doing. So, what is the most important technology that's been built by humans, either in the past, present, or in the future?
Ooh. So, I'm colored by what I'm reading right now, and I've become obsessed with Donald Braben and his works around the institution of science. And he has a hypothesis that he talks about in pioneering research that humans should not be called Homo sapiens, but should actually have a different name because sapiens means effectively wisdom. And his belief is that the thing that makes us unique is actually our ability to dissent. And so I would point out the printing press because I think from a point of view and our ability to dissent, a lot of that relates to our ability to communicate, and our ability to communicate has been fundamentally altered by our ability to actually write the words that we have in our heads.
Well shared. I love it. All right, we're going to move on to the personal questions. Pick one or the other. Well, except for the first 2 questions.
Me or somebody else?
Most famous person that pops in your mind?
Oh, sorry, you cut out there for a second.
Most famous person that pops in your mind?
Barack Obama.
All right. What's the first brand that pops in your mind?
Coca-Cola.
Book or movie?
Book.
Batman or Superman?
Batman.
Fortune cookie or birthday cake?
Fortune cookie.
5 minutes with Bezos or Oprah?
Oh. Damn, that's hard. I'm going to go with Oprah.
All right. Mountain or beach?
Mountain.
Bike or run?
Run.
Big Mac or chicken McNuggets?
Neither.
Fair. Trophy or money?
Money,
Beer or wine?
wine,
TED Talk or book reading?
book,
TikTok or Instagram?
neither,
Facebook or LinkedIn?
neither.
Favorite movie and what character would you play?
Oh, uh, Back to the Future, Marty McFly.
Ah, nice. Favorite book? I think you just mentioned one, but maybe you have a favorite.
Uh, One that I would probably gifted more than any other would be Growth or Mindset by Carol Dweck, which talks about the growth mindset.
Perfect. Favorite sports team?
Chicago Cubs.
They're okay.
Yeah,
Not bad. What is the meaning of success to you?
Uh, do honestly, the work is the win. It's doing hard work that has some net new value creation behind it.
Agreed. Love it. What is your superpower?
Distilling incredibly complex things into understandable bites.
I like that. And being able to break down those bites and help everybody else align to it. So it's brilliant. Well,
Yeah, that's the hope.
that's the hope. Well, Chris, I say it's been a pleasure getting to deep dive with you, taking lots of notes, but I appreciate all your time today. And the way we like to end our show is we like to give you the last word. So anything you want to share to investors or the founders or the business people alike, we turn it over to you to share. And please share how people can get a hold of you as well. But I want to thank you again for spending time with us and sharing all this great insight.
JP, thank you. It's been a pleasure. I like the rapid fire questions too. Those are always good to catch you on your toes. Getting a hold of me is easy. Chris at atypical.com. It's pretty simple. Keep us in mind for all those plausible science fiction things you may come across. Send us your crazy. We love it. And yeah, dream big and go after things that are worth the risk. Spend your time and effort because you only have so much time on this earth to focus on things that mean something to you.
I love it. 100% backed, stamped, red button. I love it. Thanks, man. Chris, appreciate it. Thank you.
Thanks, man. Appreciate it.
Perfect. So there was some really great insight there that was shared by Chris. And, some of them, I like the idea of the business creating the right direction around the goals and then having everybody on the team focused on those goals. If it's not right for the business, not right for the goals of the business and where they're going, then it's not worth driving down that direction. And it's going to take the focus off the business. Celebrating different types of milestones instead of always focusing on how much money we raised. Why not celebrate things that, non-dilutive funding or KPIs that you hit and utilizing those as ways to generate more value around yourself and your business. Delayed gratification. I liked his whole idea on looking at founders from a type 1, fund 2, and 3, and they fit into that second phase. Looking for that founder that is the engineer with empathy and that they're inspiring and they're helping others grow, but at the same time, they're also building their own networks of ways to learn from and gain and get around people that are educating them and learning. So I think there's so much there that you can break down and really get into and invest in that quietly honest people. I really like that. And I think there's some really great insights into what Chris shared. So thank you for joining us today. If you enjoyed the conversation, please feel free to share it with your friends, subscribe to our YouTube channel, and or please follow us on Spotify, Amazon, or Apple. Feel free to share an audio clip or video clip around our show, and we may include it in one of our future podcasts. If you can find us on all social platforms, including LinkedIn at Supporters Fund, your support and comments are truly appreciated. Please visit us at supportersfund.com or startup events at openpeoplenetwork.com. And thank you and have a fantastic day.